Hello, good afternoon. You're watching ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the market is not able to make its mind. It's red-green across the trading session. We have seen that flip-flop happening at the Nifty level. A lot of jagged edges, and 19,700 is something that we have tried many times to scale past, but it's acting as a bit of a resistance zone for us. Not able to sustain above that 19,700 mark for the Nifty as well. If you look at the broader markets, they, however, are outperforming. Whether it's a mid-cap index or small-cap index, they are actually comfortably in the green. At least the small-cap index, I remember, was showing quite a bit of outperformance, 0.5% higher for that index. Nifty Bank, that is coming under pressure, and large part of that lag is on account of big private banking names. Case in point being ICICI Bank or Kotak Bank for that matter. Both of them are dragging the index. Cement stocks, they are holding up okay. We have been getting reports as to how the companies have been able to take price hikes. So Ramco Cement as well as other names are holding up okay. India Cement's just around that flat line. Real estate, FMCG and auto, these three spaces are actually doing well for themselves. In fact, for autos, I'm sure Aisha will be talking more about it in terms of the brokerage note that we got on Aisha, as well as Varun Beverages, which is supporting the sentiment on FMCG.
Oh yeah, absolutely. Top one that we flagged off earlier today has been Eicher Motors, and that's clearly one of the leaders amidst the large caps after the Jefferies note, maintaining a buy and upping the target price to now 41.50. They're saying while rising competition, that weighed in as a concern all through the first half of the year, but that's not the case because channel checks are suggesting that there's a very limited impact of competition from both Bajaj Auto as well as Hero MotoCorp. So that and now they believe, after the recent correction which has played out in Eicher Motors, that the time is ripe to actually buy into the stock. And you are seeing buying, isn't it? Varun Beverages, that also, BofA has maintained a buy. They've upped the target price to now 1,030. They're saying distribution upside exists. The production scale-up is quite possible. New territories, new product lines. That's something that they're pretty enthused about. That stock also, almost 3 million shares traded, over a 4.5% move on that particular stock price too. Some of the channel checks are suggesting, and this is pertinent to Astral, that plastic pipe volumes could grow by about 25 to 30% in the second quarter, and that is keeping the stock enthused. In fact, Axis Capital has upgraded the stock to now a buy with a target price of 21.77, 19.18 on the stock price as we speak right now. But the index continues to be a no-go. So let's welcome on board our experts and figure out where the market overall is headed, and of course individual stocks too. Vinit Bulinchkar on the fundamentals, Kunal Naresh on the charts. Kunal, a word on the index, doesn't want to budge.
Yeah, I think so. Anisha said it right, that the index has still not been able to make its mind whether it's green or red. But I think that's what the nature of the markets we are facing over the last couple of days. Now, the good part about the market is that volatility has subsided. At least the intraday volatility has subsided for the indices. We are holding on to the 50-day moving average for the Nifty and the 100-day moving average for the Bank Nifty over the last 2 days. So that could probably be an indication that maybe the markets are trying to form or find some sort of a bottom or a support at current levels. But the other part is that we have not been able to cross or surpass about previous trading high, previous day trading high for both the indices Nifty and Bank Nifty, and that's I think that I think is a point of concern, because even if the indices find some sort of a bottom, but we are unable to surpass about the previous day trading high, that tells you that there is some sort of weakness across the strength of the bulls. And I think that could be a point of concern. So net, I'm expecting that hopefully in the next couple of days, the indices remain into this consolidation. But if we don't surpass about the previous trading high for the next consecutive days, then I believe that we could probably be going into one more round of selling pressure, hopefully by the end of this week or maybe start of the next week.
And the global cues for now are also not very supportive at all. The Asian markets are down anywhere between 0.5 to 1.3%. Kospi, for instance, was down 1.3%. Hang Seng was down 1.5%. And even if you look at the European markets right now, they have opened with cuts of anywhere between 0.5 to 1%. The pre-market rates from US are also suggesting that Dow would be down almost 120 points at start. And the Nasdaq futures for now is suggesting a cut of around 0.5%. So all of that is coming together and putting more pressure on the market. But Vinit Bulinchkar is also with us on the show. Vinit, the big question that everyone is asking right now is whether there's froth in the mid-cap and small-cap index or not, because it's seen a solid rally from the March lows. Which end of the debate are you tilting towards?
So I continue to remain positive on the mid-cap and the small-cap space. The reasons being that earnings have so far not disappointed at all. And we expect the strong trend to continue, especially given the fact that India is going to see a deluge of bond money come in. This is going to lower the cost of funds going out ahead. Second is, we are going to see a lot of changes on the MSME lending. So if in line with the ONDC, if things line up for MSMEs, it will mean that their cost of acquisition of funds could go down, and this is contrary to the internationally rising scenario of interest rates. And if you were to drill down further into the mid cap and small cap, you'll find a large number of stories which have got good secular growth trends, and valuations are not that expensive. So while it is challenging to find stocks, but those with the magnifying glass who can find out the stocks to buy into will definitely do well. We believe that the mid cap and small cap will continue to outperform.
May be looking to cut MEP on Basmati, and we're going to address that news shortly. In fact, we have on the line with us Vijay Sethia, CMD at Chamanlal Sethia as well, joining in on the show. Vijay, if I could just request you to hold on to the line for 2 minutes. I'm going to quickly bring on board our technical expert as well. Naresh, I think the problem is also the significant underperformance of the Nifty Bank, right? Where do you see that headed?
So the Bank Nifty is stuck due to the fact that the two major weights are HDFC Bank and ICICI Bank. Both are trendless. HDFC Bank is trying to find support around that 1520, 1530 mark. But once we start reversing above 1560, that would be an indication of a short-term bottom in place. Same is the case with ICICI Bank. 960 is the pivot point, goes below 940, comes back to 960, goes to 980,000, comes back to 960. So once we start showing some trend in either of the two names, which is almost like 50% of the Bank Nifty, it's tough to see a major trend move in Bank Nifty. So watching out for these two names. As of now, they're both stuck at almost the same prices for the last 2 weeks.
Okay, so that's a take coming in as far as the index is concerned. But let's welcome on board the guest on the show. Of course, we are talking about the management from Chamanlal Sethia as well. Mr. Sethia himself is there with us. Mr. Sethia, what's the kind of update that you can provide us with respect to how exports are panning out? Because there have been a lot of limitations that have been put by the government. Then there was the talk of bringing down the floor price as well. What's the impact on exports right now?
You see, this is a positive step from the government. And yesterday, Honorable Minister Mr. Piyush Goyal was discussing this with the rice industry. He gave his concern. His first concern was that the rice mean for the poor people should not rise. One. Second, he wants that the basmati farmer should get the good price. So what we propose that the rice which is meant for distribution by FCI, the price is 3,400 rupees per quintal. So you double the basmati price and then permit us for the exports. He understood our concern. We gave this opinion also that after visiting 2 trade fairs, one in Iraq, in Erbil, Iraq Foods, and one in Istanbul, that is World Food, Istanbul. So in both the cases, because of higher MEP or price restriction, we were not able to sell even a single grain at that price. So they understood our difficulty and they see the reason in what we are proposing to them. And finally, they agreed for 850. So that means it is almost double the distribution price of the non-basmati in India. So that the prices of non-basmati, which is meant for our people who have a less purchasing power, so government is worried about them, well concerned. He very clearly said, if anything, if the prices goes up, then government will again step in. So that is a clear indication, and they want that basmati farmer should get a good price, and though it is a bottom line 850, but they want that export should be on a higher rates, and we have average our export is 1050 for the last 3 months. Hopefully we will do better. This is what trade has promised, and now I think business will start at a rapid pace, and rice industry will make good money this year. Yes, ma'am.
Sure, Mr. Setia. So the other thing, of course, as you're talking about, the domestic situation is all right, right now, but the prices continue to be on the higher side. For your company itself, what's the export exposure right now? What is it likely to move up and down to?
You see, I was holding orders worth around 200 crores when this sudden price restriction was imposed. So we were unable to get RCAC for permission to export basmati rice. Now, you see, all material can go. And our business was in the range of 1,000, 1,050. It was 900, it was 1,200, it was 1,400 also at various qualities, various prices we have committed with our buyers. So I hope that everything will be now streamlined. And it is good for the entire rice industry. Everybody was waiting for this and looking towards the government. And it is a well debated, well discussed, and a very good decision from the government side for growth of basmati business and for the betterment of farmers. And they have kept the higher level of price restriction, almost double the price of the rice which is distributed by FCI to the common man. So I think it's a good move.
To get in those insights from you as to what's happening with the industry, the government's move with regards to MEP and what it means for you in your business as well. Let's just take stock of what else has been happening in the market. While at an index level, nothing really, but just want to flag off within the broader market what's really going on. Astral, we just flagged off for you. That is one stock which is holding up about 3%. There's Dixon, which is up 3.6%. Idea has spurred up about 4% as we speak right now. And some of these smaller cement plays are seeing a follow through from yesterday when they did spurt up a fair bit. Both Ramco as well as Dalmia Bharat, both these stocks have really been on a tear. And, suffice to say that the strength is not quite rubbing off on the larger cement players. It's these smaller ones which are looking good. Vinit, just wanted to get in your sense as well amidst all the news flow around various price hikes region-wise which are being undertaken. What would make these smaller cement plays interesting for you?
So one is that, we are going to see consolidation continue to happen in the space. I think Adani is going to puncture the margins which are there with their cost price coming down and they making inroads into South India. I believe that the pricing would come under pressure. If that were to happen, then we will see the small players, wanting to exit. And consolidation of the sector is what is driving the growth in the small cap stocks.
Okay, so that's the take coming in as far as the cement sector is concerned. But what else is happening in the market? Let's scan through the big buzzers. Cochin Shipyard is up a good 13%. Ditto can be said for Garden Reach as well. A 7% perk up coming in there as well. What's your take, Vinit, on all of these defense and the shipping companies? They have seen a massive run up. Is there still merit to buy into some of these names?
Out here in the defense stocks, especially the shipping defense stocks, have a little steam left. But overall, the defense sector as a whole, I believe, is slightly stretched. We are valuing, while the order book is very healthy, the order book visibility is over a larger period of time. And the markets are capturing in an almost 4 years out valuations today. So, the pricing is very, very expensive. And there can be scope for correction whenever the markets come down.
That's the take coming in on what some of these defense names are doing. Kunal, let's pick up on some of these charts. Idea, I know you don't typically recommend trading this one, but quite a spurt here. Yeah, and a consistent basis.
It's a good move for Idea because, I was actually expecting that if the mid caps and small cap indices, if they go into a correction or even a retracement of sorts, then many of these two-digit stocks would probably go into a similar kind of a trend. But Idea, I think, has been a differentiated chart. The stock, even though it's made a minor swing low a couple of days back around that 10.8, 10.75 mark, I think it's managed to come back quite strongly. This could be one of the better closes for Idea on the daily closing, assuming if it closes at this 11.9, 11.95 mark for the stock, again indicating for breakout for the stock over the near term. So typically I don't recommend these kind of names, but yes, the momentum over here looks quite strong. The stock has been making new highs and trying to absorb the corrective phase for itself. That's generally a sign of a change of trend for Vodafone Idea.
Right. We were just flagging off cement. Let's try and understand what the channel checks are indicating in terms of pricing across regions. And Sumit is here with more details. Sumit?
Well, the channel check which has been conducted by Anand Rathi indicates that in the northern region, companies are likely to announce a price hike of around 15 rupees per bag from the month of October, and companies are also willing to reduce supply in order to implement these price hikes in the northern region. When it comes to the eastern region, in Kolkata, out of the 70 rupees per bag price hike that was announced in the month of September, around 50 rupees per bag price hike has actually sustained, and for the month of October, a price hike of around 20 to 30 rupees per bag has been announced in the eastern region. When it comes to the central region, in Indore specifically, if you see, when companies have taken a price hike of 5 rupees in Kanpur and Lucknow, a price hike of 10 rupees has been announced. However, the same could not be implemented, and so far there has been no announcement when it comes to a price hike that could be implemented for the month of October. When it comes to western region, in Mumbai, companies had taken a price hike of 5 rupees per bag. However, the same had to be rolled out because of weak demand and more supply coming in the market, and hence a price cut of actually a 10 rupees per bag was taken. Also for the month of October, so far there has been no indication of what could be the price hike, but dealers are still expecting that there could be a price hike that could be announced in the month of October. And lastly, when it comes to the southern region, in Bangalore, cement companies have announced a price hike of around 50 rupees per bag from the month of October. In Chennai, there has been no price hike announcement so far, and in Hyderabad, dealers are expecting that the prices could be hiked by around 50 to 80 rupees per bag from the month of October.
The latest as far as the cement price checks are concerned. At least the companies have been able to take some price hikes, and the demand is good enough to absorb that. Let's do one thing. Let's slip into a very short break. When we come back, we'll discuss more on the markets.
Back to closing trades right here, ET now, and nothing really is going on with the index. Not that we're complaining. It's fine to not see weakness in some consolidation, which I guess is only healthy at this level. But we're just scurrying around in a band of 50 odd points or so. It's the Nifty Bank actually, which is the weaker link in the market. If we can just bring up some of the constituents there. IndusInd Bank, for instance, is one of the top Nifty losers today. That's down about 1.6%. Kotak Bank is down 1%. You're not seeing participation from ICICI Bank as well. That's cutting around those 950, 960 odd levels. And that's pretty much the case with even an SBI and an Axis Bank today. They're the ones which are sort of ebbing off. Vinith, I don't know if you're making that kind of distinction in your investment thesis right now or not, but many believe that it's actually time to bet big on PSBs and smaller ones and not the large private banking names. They're going to continue to remain stuck here for a while, as is already playing out with the likes of an HDFC Bank and Kotak, etc.
So we've been advocating this trade-off from quite some time, and we've done it on your shows also earlier. So we believe that the valuations of PSBs are far, far cheaper than the private banks. And if you see the growth prospects and also the differentiation in businesses has gone away, banking has got completely commoditized. So consisting, and if you see the ROEs of all the PSBs as well as the private banks are more or less in the same range. So it makes it very difficult to differentiate with what banks you buy. I believe that SBI, which of course not moving because it's the large bank, but the smaller banks like Bank of Baroda, Union Bank, Mahindra Bank offer great opportunities for revaluation to take place.
Fair enough. Vineet, what's your take on JSW Energy?
Very, very positive. I think they've got a very annuity kind of business model which deals their business, and they're also early movers into the PSB space, that is the pump storage battery space. So I believe that they will do extremely well going out ahead.
In fact, you know what, Vineet, I got the opportunity to speak with Mr. Prashant Jain, the joint MD and CEO at JSW Energy. Listening to what he had to say about the thermal unit, the 700 megawatt Ind-Bharat, which is coming up, as well as what is the latest with the pump storage, as you talked about.
We have already fired the boiler last week in that unit, and I am getting the feedback every day that things are running pretty good, but there is a bit connectivity thing which is we are trying to sort it out. Otherwise, plant could have started in next 10 days time. So the connectivity which on the transmission side we are sorting out. So it should be up and running in the month of October.
Okay, so next few weeks we'll be waiting back for that big announcement as well. But where would you sell that power from? Because if I understand it right, there's no PPA signed, right? Do you think there's enough demand on the merchant side that you'll be able to run it at a very high PLF?
Yeah, it will run at 104% of PLF.
Wow.
Yeah.
That are you
and we are going to sell it in the merchant power because, it's a low cost power and as I said, that the lowest cost fuel cost kind of a situation because we are directly connected by a railway line and to the mine. And so it's going to be very, very cost economical for us and we will be running full in merchant.
We will play that entire interaction in just a short while from now. But let's cut across to New Delhi on the sidelines of the IMI event. That's R.C. Bhargav in conversation with my colleague Sumit Chaturvedi.
Only be possible if manufacturing sector grows faster and we reach at least 25% of GDP through the manufacturing sector. To get to this point, the center over the last 9 years and 10 years now has been making a series of reforms and improvements in the environment. The ease of doing business, as you know, we used to be somewhere 140, 150 at one time. We have come down to 62. A lot of tax reforms have happened. GST has come in. Tax rates have come down. More than 1,000 old acts have been abolished. And a whole series of reforms have happened, all designed to make it easier to do business in India, easier to be more competitive in manufacturing. Unfortunately, the results are not yet apparent. Manufacturing growth continues, and the reason I think is that the bulk of the interaction of manufacturers, entrepreneurs is with the state government. And in state governments, the bureaucracy, the entire administration is still not changed the way the central government has changed. And there are lots of delays. Time is not a factor which is valued highly by most people in the states. And the attitude of administration is very much similar to what it used to be in the license and control days, that the job of the bureaucracy, the job of the civil servant is to control rather than facilitate. And that change has not happened. I think along with that, the entrepreneurs also are largely maintaining a mindset and practices which were developed during the license and control Raj. Because in those days, private sector was not in a position to grow or in any way innovate because the license laid down every condition of their functioning. Now, that resulted in various malpractices developing. We are all aware of the growth of black money in the country. We are all aware of what black money growth meant in terms of ostentatious consumption. Now, if you look around, I doubt if any one of us here will be able to say that ostentatious consumption has gone down in India. If at all it has happened in the opposite direction, that people now like to show how much they can spend on a grandchild's birthday or some such event. And the race is that, oh, that guy spent 20 crores, I must spend 25 crores to show that I have more money than he has. So as long as the system continues where entrepreneurs, businessmen
Okay, so that was the word coming in from the IMA event. That's R.C. Bhargava talking about overall the management mantras coming in. But Vineet, your take regarding the automobile sector, and I want to specifically talk about two-wheelers and not the the passenger vehicles here. Within the two-wheeler space today, of course, there was that note that came in from Jefferies talking positively about Eicher Motor of how one should buy the underperformance in the stock right now. Your view?
Actually, we have a target of almost 4,200 on the stock. Uh, the stock had, when we initiated about 6 months back, the stock had moved from 3,300 to 3,700. But the moment this Bajaj Auto kind of, entering that segment came in, I think the stock sold off because of the concerns that Bajaj Auto would eat into the market share of and the dominance of Eicher Motors. We firmly believe that the market will expand. Their market share might come down, but purely because of the the market expanding, and we don't see any slowdown in the growth of the uh, vehicle numbers that are sold out, and we continue to remain strong buyers in the stock.
Coming in on what the two-wheelers have been up to. Naresh, let's get your thoughts on the charts of Eicher Motors. Of course, there's been an upgrade this morning, and that's why you're seeing that extra fervor on what Eicher Motors is currently up to in trade. But where do you think the price could be headed in the near term as well as the longer? Naresh, you're on mute.
For the last 3 to 4 weeks, the stock was in a range of 3,300 to 3,450. Today, we've crossed about 3,450. Now, the gap down for the stock happened around 3,550 to 3,650 levels. That is where the announcements came. So, out that point, that is what will be the target for the near-term move. It's only when we cross 3,650 is where we accept a longer-term trend change for the stock. So, for now, it's a preemptive buy here with a very strict stop loss at 3,450 and expect a move towards 3,650 in the short term.
Okay, so that's a take coming in on some of these names as well from the auto pack. In terms of what else is buzzing around in the market, yes, there is those shipping companies that's doing okay. There's Varun Beverages, Vodafone Idea as we talked about. Colgate also is actually seeing a bit of a breakout right now. That's perking up quite a bit. And then there's NIIT Learning System, there's GE Shipping and Shipping Corporation of India. So all of these names which have shipping as prefix or suffix, those are the ones which are actually doing quite well for themselves. Kunal, your take on Colgate, which is seeing quite a bit of perk up. And if I want to talk about one of the losers, what's happening to Greenlam Industries?
So Colgate is a case of a breakout. The stock has confirmed a breakout of 3 months of consolidation for the month of July. When the stock was at 2,000, it fell down to as much as I think 1,900, 1,885 mark. And then from there, the stock has ended this consolidation by showing signs of a breakout today. Even though the volumes are not as strong as typically we look into a breakout, but then I think because of the nature of the markets we are into, where the markets are a lot more sideways and the trading activity has dropped down significantly. So that could be one of the reasons why the volumes are not perked up. But I think it looks very attractive in terms of the chart setup. Greenlam is something which I don't track, but again on the charts, 2 weeks of consecutive price downtrend for Greenlam. Stock has corrected from 495 or rather 520 towards current levels of 396. It's broken below the 50 and the 100-day moving average respectively for the stock. So in terms of a breakout or rather in terms of a buy, we would ideally have to wait out for a point when the stock reverses back again above the 50-day moving average to initiate a buy. That could be maybe around 435 to 440 mark for Greenlam.
Right, okay. On that note, let's thank Vinit Bulinchkar as well for Vinit taking your time out and joining us today. Let's also get in some closing strategies too. Naresh, what's on your list?
So that would be a buy on Indus Towers. The stock is now setting up for a breakout above the 190 to 195 mark. And we are seeing Idea make about 12. So that generally augurs well for the stock, highly correlated one with Idea. So out here expecting a move towards 200, 210 in the short term.
Right. And Kunal, what about your strategies?
I'll go with MCX. After yesterday's strong price action day, today seems to be a subdued day for MCX, but looks attractive as a setup. The stock completing a bullish flag pattern. So expecting the stock to cross the levels of 2,000 hopefully the next couple of days.
Okay, on that note, let's head into a very quick break. When we come back, we'll track the last half an hour of this very quiet trading session.
Welcome back. Well, the market is fairly quiet, though of course there are a lot of stocks, individual stocks which are buzzing around, especially the defense pack and the shipping names. So Cochin Shipyard, MTAR Technologies, Bharat Dynamics, these are the names which are perking up. And apart from that, we have already talked about Dixon Tech, which is higher by 4%, Lodha or Macrotech Developers, which is higher by 4.3%. So some of these names are definitely holding out and bucking the trend, because if you look at names like Sundaram Clayton or Shriram Finance, they are coming under quite a bit of pressure. Actually, Shriram Finance has seen quite a bit of breakdown in the last few minutes itself. We should pull up that stock. So yes, that's suddenly seen a bit of a crunch as well. We also have Dwayne Choksey joining us on the show. Dwayne, let me just begin by giving you an open check and asking you about the stock that you like right now. Any top 2-3 recommendations that you would like to discuss?
Good afternoon, Anisha. Well, I think the larger amount of preference would stay with the large cap stocks, and also the fact that I think they are available at a corrected valuations, where the fundamentals remain strong, and that is where probably some of the corporate banks, private sector banks like ICICI, HDFC, they remain in the list. Then I think we have the the likes of Reliance in the list, largely because of the corrected price that we are seeing as an opportunity. Some of the IT companies in particular are the preference for, because of the larger amount of visibility happening for them in the business with a new order intake coming in for a longer tenure. Likes of Infosys, likes of LTTS are the ones I think which we prefer to add into the portfolio. So we love this kind of price correction happening in some of the counters, and that's where probably accumulate some of the bigger companies. The small size companies are relatively more vulnerable to the liquidity-led push in the market, and that's where probably I think we are slightly more concerned. Don't buy the valuation, expensive valuation at this point of time, and that's the reason for which I think sticking our choice to some of the large caps where the growth is more certain and sustainable.
There have been a lot of new paper as well hitting the market. Just wanted to understand what's your thought on JSW Infra if you've taken a look.
Well, I haven't gone into detail, Aisha, about the company, but the fact remains that you are absolutely right. The new papers are hitting the market, and that's going to be the challenge going forward. Many of the companies which are basically quoting at a premium valuation, my sense is that I think investors will probably flip this premium valuation book profits and get into some of the newer opportunities which are coming into the market. Of course, JSW infrastructure is yet to get under our cover, so I think we have not yet gone into details. So we'll talk some other day.
Wait by for your recommendation on that day when you look at JSW infrastructure. But for now, let's also listen into these exclusive voices that we have for you on the channel, right from the CEO of Indigo to Tata Steel as well as JSW Energy.
Of course, we're speaking with Pratt & Whitney and are in close contact with Pratt & Whitney to have a good understanding what's there in the months ahead. But Indigo, I would say, is always a little ahead of the pack, so we are sort of preparing already now for what next mitigating measures we should take. One of our very fundamental customer promises, affordable fares, and that's what we keep there. So yes, there will be seasonal fluctuations, like there always are. At the end of the day, we also see prices.
Okay, so that was the word coming in from Indigo. Deveen, what's your view on Indigo now? Because on one hand, you have, of course, the other names which are losing market share and Indigo is going to gain that. Then the crude prices are elevated and perhaps a lot of analysts are saying that the best was already baked in Q1 and the price as well of the stock.
Well, I think on one side, you definitely have a higher amount of seat occupancy in the respective routes on which they are traveling. On the other side, the competition pressure is a little less because of some of the competitors are out of the services. So that is definitely a good news for a company like Indigo. And on the top of it, the crude oil prices have remained steady up till now. And as a result of which, the price pressure has remained under control. Now, that situation is not likely to remain so. Come winter in the Western world, and you are likely to see the prices of crude oil going up, and as a result of which, I think the fuel price also likely to go up. Given that kind of a situation happening, I would rather like to play a little bit more careful at this point of time. The operation part of the demand part of the situation, I think, remains strong because of the India economy growing. But I think pricing front and the profit margin front, there might be some slippages coming in between. So one will have to be a little bit more careful. As such, this business I think is quite vulnerable to many such kind of variables, and that's where probably one has to be very mindful about buying them or buying this business, particularly I think when the prices are ruling expensive.
Okay, let me also take it across to Sharad then and get in a sense of what the dealing room chatter is, what are the stocks being talked about, and Sharad, also what's the subscription figure for JSW so far?
Yes, and first we are going to be speaking about Deepak Fertilizers. What we are hearing from the dealers is buying has been seen in the first half of the day, and this is coming from both HNIs as well as the DI segment. Now looking at the stock has actually crossed its important level of 200 DMA levels. Volumes are almost 2 times its 20-day average, and company recently met domestic institutional investors yesterday, and that could be a rub-off effect on the prices as well. Now, Axis Mutual Fund has roughly 1.29% stake in the company, and the company over the last 3 to 4 quarters was having pressures, especially on the margin front because of the changes in the raw material costs. But going ahead, the key trigger for the stock, this will be included, would be the change in the product mix because of going into higher margin products, and also its debottlenecking exercise. Apart from this, also JSW Infra would be in focus. Currently, it's almost subscribed 1.63 times, and do remember yesterday itself, if you look at the numbers, the retail portion was already subscribed, and overall, if you look at it, tomorrow would be the last day for the subscription. And this is the first IPO coming in from the JSW group after 13 years, and it's India's second largest private port.
It's about the dealing room chatter as well as the latest IPO subscription figures for JSW Infrastructure. In the meantime, let's take stock of some of the other buzzers as well. And I can't spot many names, to be honest, except defense, a pocket of cement, and some of these infrastructure names as well actually doing okay, whether it's NCC for that matter, GET&D, and Macrotech developers as well. But separately, what else is happening in the market? Well, it was also about Varun Beverages that was seeing a lot of action on account of that Bank of America note, wherein they are talking about growth sustaining, and that's why they have a target price of almost 1,030 on the stock. Kunal, your quick word on this one, and let's also add the other names. Let's say Haldiram, Pratap Snacks, BKG to the entire set. I know it's one is drinks versus the snacks of it, but for the entire pocket.
Yeah, Varun Beverages looks attractive. In fact, I think the stock has come out of a 2-week consolidation. 940 or 935 was the breakout for Varun Beverages on the daily charts, and today seems to be that classic day where the stock moved up higher on the back of higher volumes, managed to break past this 935, 940 levels, and now it's trading almost closer to the higher point of the day. So it's been a momentum which has been seen throughout the day for Varun Beverages on the back of higher volumes. Looks very attractive as a chart, and would expect the stock to get into a follow-through up move. The only concern is that we may not see an immediate follow-through like for most of the stocks. Like for example, what we saw into offbeat names like MCX, etc., where these stocks got to a breakout on the back of some heavy volumes, but then no immediate follow-through. Eventually, over the next 1 or 2 weeks, these stocks, they managed to see one more leg of uptrend. So I would probably expect similar trends for Varun Beverages. Most of the other names like Bikaji, etc., I don't track.
Okay, that's the take coming in on some of these consumption names. Just want to mark, what's been happening within some of the performing sectors. And it's actually auto ancillaries which has seen some of the fresh 52-week highs, year-to-date highs being formed there. Cases in point being Sona BLW, there's been a JBM Auto as well, which has been a very good performer. If we can just bring up longer duration charts for most of these names. Devin, auto anks versus autos?
Of course, I think the choice would remain with auto hands to begin with, largely because of few facts. Some of these companies haven't been performing on the pricing front in the market, yet they are continuing to do relatively better performance, and I think the performance has been quite strong, given the fact that I think their OEMs are actually, I think, showing relatively better result, be it passenger vehicle, be it commercial vehicle, even for that matter, farm equipments, and also the two-wheelers. In each of the verticals in the auto space, most of these companies are, I think, having a much bigger business to talk about at this point of time. And that's where probably I believe that I think it's an opportunity for buying into some of the auto ancillary companies. As we read, I think most of the companies are also, I think, significantly, some of the companies, particularly the Minda or the Minda corporations, They are also focused on significantly building the ADAS portfolio, which is a value addition in the existing fleet for commercial vehicles at the same time also in passenger vehicles. So I think some of the niche plays are being played out at this point of time, and I think one could possibly go for such names I think, selectively to add them into the portfolio now.
So that was about the top recommendations from the auto ancillaries. But shifting focus, we caught up with JSPL's MD, Mr. Jha, on their expansion plans and how the company is likely to fund those expansion plans as well. Listen into a slice of that conversation.
We are continuously in a mode of expansion right now, and we are doubling the capacity at Angul, which is our plant in Odisha, which will double its capacity by next year. And as far as our other plant at Raigad is concerned, again, we are working on improving the capacity almost 2 times the existing capacity within the next 3 years. We will also have further expansion of Angul after we have done our first phase of expansion right now.
And how do you plan to fund this capex? And will we see like that debt or EBITDA materially increase by the end of financial year 24?
We have given a very public statement about our fiscal discipline on expansion. We have said that at any point of time, our debt cannot exceed 1.5 times our EBITDA. We are currently at a very low debt level, so there is a lot of internal accrual that we expect to fund our expansions. We are being very conservative about it, and it is going to be in line with our cash flow generation internally.
And what about the recent mines you had bagged? When will the production start there?
The mines are just waiting for minor clearances here and there. We have already entered Gare Palma 4/6. There is already some work going on over there. Very soon we will start having our coal coming out of Gare Palma 4/6. Similarly, Utkal C is also absolutely in the final stages of entry into the site and starting the mining activities.
The GST Council is also all set to meet come October first week. In fact, let me take it across to my colleague Prakash Priyadarshi and find out what his sources are telling him in terms of what could be under discussion this time.
Yes, an important development coming in as next GST Council meeting is going to take place on October 7. And it is expected that the Council may take some important decision. However, formal agenda is still under preparation. The sources are saying that the Council may discuss the implementation of new GST structure for online gaming, casino and horse racing. As you are aware, the GST Council has already approved uniform 28% GST on online gaming, casino and horse racing at full face value, and implementation is something which is very important for the GST Council to take it forward. This process has to be implemented from October 2023 as per the previous decision, but the GST Council is trying to review the current status, and before that it is required to make necessary amendments in GST Act. However, central government has already taken Parliament's approval for necessary amendments in IGST and CGST Act, but the state government is also required to make necessary amendments in SGST Act. That is something which will be discussed by the GST Council, and current status will be reviewed. Apart from that, sources are also saying that some GST compliance related issues are also there that could be there for the GST Council for a discussion. In addition to that, one important agenda is also there, which is expected to be there as a formal agenda for the GST Council for discussion, is with regard to new GST rates on millet-based products, and that could be brought into 0% category. So these are the important expected agenda that could be there for the GST Council for a discussion.
Thanks, Prakash, for that. Of course, Delta Corp is going to be in focus on account of that, apart from Nazara Tech as well. Delta Corp is right now languishing at 52-week lows. Yesterday, in one of the block deals, there was also that data that came out that Ashish Kacholia has sold some stake into the counter. So a lot brewing as far as this space is concerned. But just wanted to come back to the conversation, Dipan, and talk about the private banking names. Now, HDFC Bank, ICICI Bank, as well as Kotak Mahindra Bank, all three of them have been underperforming. We all have been asking the question that if index has to go higher, these stocks have to perform one day or the other. If you had to take a bet between these three names, which comes as the first buy to mind?
So I think clearly the balance sheet size of ICICI Bank and the Axis Bank definitely, I think, are on the side of higher amount of growth that we are talking about. So from that particular perspective, the banks which could possibly participate into the higher credit offtake are the ones which I have mentioned. And we believe that I think they are relatively better placed. Kotak, of course, I think has been on a muted track, I think, at this point of time, though it is, I think, quite significantly positioned, I think, including in different verticals in which they are operating. So would probably, I think, given a choice, I think would now buy in the collective price ICICI Bank to begin with, and then rest of the two.
Okay, in fact, let me also play a slice of the conversation that my colleague Smita Karir had about what's really happening within funding when it comes to startups with Sanjeev Bikhchandani.
Funding never went away, right? It just became more discerning. So lots of money, but people are now funding very carefully. Maybe valuations may be a bit muted. Maybe the velocity of funding may be slow. Maybe some of the bets people are taking may not be that speculative. But funding is there.
Funding is there, but which sectors are you bullish on?
We invest in tech, and obviously I see a lot of tech companies, whether it's, I think AI and deep tech are emerging. I think fintech remains interesting. Health tech, I think supply chain automation, these are the areas we're looking at.
Right. So what do you also make of the fact that some of the unicorns are now turning profitable as well? If we look at some of the data, Zomato actually turned profitable for the first time since its listing in Q1 FY24. Nykaa again and Meesho as well. Do you see this continuing, this momentum continue for other startups as well, seeing the global headwinds that they have not really waned?
Well, I think it's pretty clear investors are giving a signal to the startup investing to get to profit. Now, many will do that and get there, and some will not be able to, and they will have a challenge.
Right. And how does employability look in future? Because, there's a lot of talk around AI actually replacing jobs, while there's a certain faction that says that, there will be no job loss, but we can reskill people and people will need to sort of up their skills. But where do you see companies moving on that?
So we do not see any impact of AI for job losses just yet. I do think, however, that there will be some amount of retooling, reskilling in organizations as AI begins to move in. Right. But I don't see widespread job losses.
So that's a word coming in from Mr. Bikhchandani, not saying that the AI is going to cause a lot of job losses at the moment. But coming back to the technicals of the market, and let's see BTSC ideas from our chartist. Naresh, you go first.
First is a buy on ONGC. The stock is close to making a new 52-week high, sustaining well and showing a lot of relative strength. Stop loss at 186, target price of 193. Second is a buy on Indus Towers, getting closer to a breakout here as well. Stop loss at 187, target price of 195.
Right. Kunal, what about your BTST trades?
NTPC is the first stock which I would suggest as a buy. The stock trading at 240 odd levels, showing a triangular pattern on the daily charts. 255 is the target. Stop loss at 233. And the second would be a buy on Indus Tower. That's a stock which is showing signs of a swing breakout on the daily time frame. 200 as the target. Stop loss 184.
Okay, those are some BTST trades coming your way. Let's also take a look at what else is happening in the market, because while the index is going in absolutely quiet into the close, that's not quite the case with some of the individual sectors like Nifty Bank, which has actually underperformed today vis-a-vis what the Nifty has done, and various PSBs as well as private sector banks, the larger ones, have weighed heavy here. What's held out, of course, has been iShares. Nestle as well has done pretty well. Hero MotoCorp, Tata Steel, Bajaj Auto, they've all seen some decent gains coming in. And L&T as well has done pretty okay. It's closing in with almost a 0.5% gain as we speak right now. Devin, before we let you go, just wanted to understand whether you're recommending anything in terms of a buy after the recent dip that the market has seen.
Well, I think we continue to hold our positions and not immediately buying a whole lot of stocks. But certainly, I think in the corrective downside, few stocks which I earlier mentioned, I think they are remaining on our preference list to buy. We continue to like the proposition in Geo Financial Services. That is one stock we continue to like and continue to accumulate in the portfolio. Of course, I think it's a long-term investment that we have kept and nothing immediately because the company is yet to start the full-scale operations. Similarly, I think in auto space and auto ancillary space, I particularly find myself more comfortable buying into the likes of Tata Motors, likes of Ashok Leyland. They remain relatively more strong proposition and the downside risk is protected, though I think they're the larger companies. So we selectively buy few of these companies in the portfolio, along with, I think, a couple of ancillary names which I mentioned.
Okay. Devin, we'll let you go on that note. Thanks as always for taking the time out and joining in. Nothing really has happened with the